You are working as a tax consultant at Abacus Accounting Pty Limited in Part B. Hyperion is one of your clients. Hyperion's accountant approached you during the 2019 year of assessment and asked for advice. So during the 2009 assessment, the accountant comes, asks you some questions. The accountant wished to know what the implications would be if Hyperion made the following payments on the 1st of October 2019. So this is just the tax year again, 1st of January 2019, 31 December 2019. So they're asking a question here. If on the 1st of October 2019 a payment takes place, and this payment or payments will be for short-term insurance 180,000 rands and rental in respect of the lease discussed in issue 3 of 1 to 50. Now issue 3 in part A, you'll remember, is where we leased a property from block rent, and we had 250,000 rands monthly rental. So that is in respect of that. So they say the short-term insurance of 180,000 rands relates to a period of 1 October to 31 September 2020. Right, so that is for 12 months. So let's just quickly go and do that. So over here, this is the insurance. It's for the period 1 October 2019 to 30 September 2020. Now, important here, our tax year ends over here. Okay, so let me actually do this in a little bit of a less misleading looking fashion, like that. Okay, so for this period over here, October to December, 3 months is in the current year and 9 months. So 3 months current year, 9 months prepaid. So right, 180,000 rands, this is for a period of 12, so 15,000 rands. 3 times 15,000 equals 45,000. And 9 months times 15 is 135. Okay, cool. Then the rental is for the period 1 January 2020 to 31 May. Okay, so the rental is for this period. So let's do this in red. It's for this period. Sorry, up a little probably a year. 31 May. So it is for 5 months. So let's actually do it like this. Current year, prepaid. Insurance, 45,000 rands, 3 months is in the current year, and prepaid is 135,000 rands and 9 months. Rental, current year, nothing, because they say it is prepaid for the period 1 January 2020. So, right, and then the total is 1 to 50, and that's 5 months. So 5 months times 250,000, that agrees with the information we saw in part 1, or part A, issue 3. All right, that we've got over there. So we'll talk about it in a bit. Then part C. Hyperion is planning on acquiring 80% of the equity shares in Supreme Pty Limited. Hyperion will fund the purchase of the shares by obtaining a loan of 2 million rands from ABSA, which is a bank that we all know, but in case you didn't know. The loan will attract interest at 10% per annum. The loan will be effective from the 1st of June 2020, and the date on which the shares in Supreme, which is the date on which the shares in Supreme will be acquired, and the loan will be settled in full on the 30th of June 2025. So it's a 5-year loan, and it's all from the next tax year. The interest will be payable on the 31st December of each year and is calculated as simple interest on 2 million. Right, so it's simple. That just means they're going to say 2 million times 10% times the number of days over 365. Supreme is a company that has been developing, so this is now this company in which we want to buy the shares. So again, let's just quickly recap. We're going to take out a loan for 2 million rands to buy 80% of the shares in a company called Supreme. This company, Supreme, has been developing smart kitchenware which communicates with smartphones through an app. So no longer do you have to worry about wonder if your kettle has boiled, you can just check it on your phone. Right, so although Supreme is only a few years old, Hyperion's board of directors believe in its potential. That's nice. They believe that they will earn a modest dividend of 100,000 rands from Supreme during their first year of ownership. Right, so dividend, 100,000 in, section 10(1)K, 100,000 out. Okay, so obviously we don't look at it. The question is here. Already we can see interest. Can we claim it as a deduction? Section 11A. Right? Can you usually, now this is quickly recap, can you usually claim interest on loans to acquire shares under section 11A? No, because it produces null income. So it's not in a production of income. Right, we do have a court case, Drakensberg Garden Natal court case, which we'll talk about a little bit, which we could potentially apply there. And then I want you to think about section 24.0. Right, so that's it, guys, for the reading time here. In our next recording, we'll start the required and answering the question.